Since the opening of CIFTIS, President Xi pointed out the direction for us. On July the 24th, the Political Bureau's meeting also pointed out that as China's economy continues to recover, the momentum is good and we're making good progress in high-quality development, but still there are ups and downs. So now there is a lack of demand and the businesses are having a difficult time. We are also facing a complicated external environment. And we're also facing the downward pressure of foreign investment. The foreign investment is facing a lot of uncertainties in terms of market and many other aspects. So the State Council issued a lot of new measures, especially the newly printed document about further improving foreign investment environment and attracting more foreign investment, which is aimed at boosting foreign investment confidence. So today we have with us the foreign investors who will share their insights. Because of time limits, each panelist will have 5 minutes to make a speech. They can give a brief introduction to their company, and they can also touch upon one of the 4 topics as follows. First, and you can now think about which topic you want to focus on. The first one is the opinions about promoting the private sector and also the opinion about improving foreign investment environment. And why at this time we have these opinions, and we can make some comparisons historically. What are the features of these measures? And from the perspective of investors, what kind of further policy support you need to implement these policies? So the second one is that because of the international environment and also the corresponding monetary policy, the capital market of China is now volatile. How to address those volatilities of the stock market and foreign exchange market, and how to address the relevant economic issues. So how to address the volatilities in the bond market and the stock market, etc. Third, how do you see the investment boom in the internet industry, and what is the features of this new round of investment, and what are some potential focus of attention? And fourth, what are the areas of investment that you're interested in going forward? What are the areas that you are optimistic about when you make investment? So now I think I would like to give the floor to the panelists. We will listen to their views and recommendations and insights. I think we can follow the name list according to the order indicated in the list. The first one is CEO of China Capital Management Group Company Limited, Mr. Chuck P.J. Chen. Thank you very much, Madam Sun. Distinguished guests, I'm deeply honored to join you at this roundtable. I am Chuck Chen of the China Capital Management Group Company Limited. I'm also the chairman of the Ruihua Health Insurance Company. So I've also been in the health insurance industry for some years. So for me, most of the time was spent in the insurance industry, and in recent years I have been focused on health, including investment in the health industry and the operation of health-related insurance. Just now, Madam Sun listed out 4 topics for us to speak on. I think those are all very macro topics. We need to make very good policy recommendations You can just focus on one of the 4 topics. I think that is still very difficult, even if I choose just one. I think I want to talk about the 4th one. I will take the perspective of an investor and also in the context of my own personal experience. The first thing, now recommendations for the regulatory policy and investment guidance. I think now China is still at a stage of the primary level of development of socialism. Consistent with this stage of development, the investment policy, the regulatory policy, and the relevant institutions and systems are a good match. So this is something we need to think about. I have been thinking about this problem too, personally. So the reform and opening up has been going on for many years, especially in the past decade. China's economic and social changes are huge. At the same time, the economic and social development are also faced with a lot of challenges. We sometimes talk about this question. Is there enough confidence, and what is our view about the economic development status? So, as an investor and as a business leader, I think now many of the policies and the mechanisms and systems are not really a good match for the primary stage of socialism. That is to say, now our policy probably is taking a further step. And probably there is some misperception or misunderstanding of the features of the primary stage of socialism. I don't want to go into details, but from the perspective of the insurance industry, I think the regulatory policy is more oriented for a mature market or a well-developed market. And that is also true for the political direction. So it is not quite matching the primary stage of socialism. So that is the first point I want to make. The second point I want to make is that we need to have full confidence in the power of the market. You know, I was in the health industry, and I'm still in the health industry. And now the aging problem is really challenging in China. It is hugely challenging. Now, the ratio of people above the age of 60 is 19%. You know, I'm from Shanghai. Shanghai is the most aged city, and the ratio of people over 60 years already is 38%. Last year, the municipal government gave us data. Actually, now Shanghai has 1.88 million families. So it is really serious. And this year, we only have 7.8 million newborns this year. That is to say, in 22 years. And these newborns all graduate from universities. So that is to say, we only have these few people who will be employed. And this year, we have about 70,000 people who will go to college. So that is to say, we will see huge plummets of employable people. So our social security policy cannot adapt truly to the aging situation in China if we just depend on social security to provide full security for the old age support. By 2022, the outstanding of pensions is actually just 3,000 per person. It is terrifying because that is too little. So that is to say, fewer and fewer people will pay for social insurance, and the people who can enjoy it will decline in number. How can we address this challenge? We need to depend on the market. To solve the social security issue and the old age support issue, we need to depend on the market, the private sector. So that is why the party report and the government report also. Actually, the report of the 20th Party Congress said two things. First, we need to actively work for long-term medical insurance. So this is a party Congress report, and it mentioned two important things about commercial insurance. What does that mean? It means that the central government and the central leadership has realized that we need to depend on commercial approaches to make up for the rigid demand of social development.
We have to mobilize the market forces based on the policies or from many other factors. All of these factors has to be around the market driving forces to mobilize the market entities to play its role. And this is exactly the focus of the matter. Only when the market forces play its role can the market confidence be boosted as soon as possible. This is number one issue. And number two issue and the number three issue is that we have to trust the forces from globalization, because this is the forum for globalization. About the issue of globalization, I believe that we are the beneficiary as the Chinese people of globalization of the world. And China also played the role as a promoter for globalization. And as up to now, to further open up, especially with the high quality, the impetus has been given from the central government, which is a very positive signal. And the investment in specifically medical care, I believe the global or globalization will play even a more positive role on that. So time's up for you.
Thank you for your insights,
good.
And this is really good suggestions to the policymaker. And next, I'd like to invite Mr. Chen Weiguang, Managing Partner of Blue Run Ventures China. 5 minutes, please. Good afternoon. My name is Chen Weiguang from Blue Run Ventures China. We invested in sci-tech, in startups. We started from Silicon Valley, and we tracked China's development of the businesses for more than 1 decade. And we invested altogether $2 billion already into the sci-tech startups. We invested in the information technology, new energy sectors, and biological technology companies. A lot of startups are well known to you, like a lot of innovative companies and cloud computing featuring companies and 5A. These are the very famous names and brands to Chinese people, and we invested as well into these companies. In this past more than 10 years, the investment in sci-tech is mainly focused on several key factors. The first one is that the founders, who are very hardworking and very diligent, who are also very young, and they are very trustworthy. And the second focus is that in the past, the government also encouraged innovation and startups by the youngsters. And the third focus is that we have different types of funding or capital to support sci-tech innovative companies, and in US dollars or in RMB. As long as there is a means, there is a way to use them. So you probably have noticed with the somehow dilemma of the relation between China and US, President Biden also declared a conjunction not allowing the U.S. capital or funding invested into the sci-tech related sectors around like AI or some sensitive technology related companies or sectors which are forbidden for the U.S. fundings to be invested in, and that also have somehow impact on the development and also the trend of the development of these companies. Talking about the LP, the nature of the funding are for long term. Usually the USD fund, the duration of the this fund is like 10 to 12 years. And it means that this long-term funding usually would be very patient compared to RMB LP. Usually it will require 7 years of the turn. So most of the fund, if it is in RMB, if you want to invest in those innovative and specialized sci-tech companies, you will feel very stressful because you have to get the return within 7 to 8 years. So the turnover here is somehow compared to USD funding will be very stressful. On the other hand, the competition between China and US or the stress between China and the US usually would impact our incumbent investment in the previous programs. Previously, we can have the RMB invested into the program in advance. And before IPO or IPO in US market, then there will be the very convenient and flexible exchange from RMB to USD. But in the future, if you want to get the IPO on US market, probably you have to go through some procedures and some limitations, and the ACO environment right now has been changed and reshaped. And the ACO environment to the sci-tech projects or startups is very important. Will it create further values for the sci-tech companies or not? If the ACO environment is just for long-term benefit or short-term benefit, then for the founders, especially the founders from the sci-tech sectors, they will feel that in the future, the perspective is not getting the return to them in the end. And they will be discouraged. And also, they will be discouraged not only for the founders, but also for the talents to be attracted within next 2 years. In IT sector, I probably would discover that a lot of excellent youngsters, the young talents, they would feel that the domestic ACO environment are not supportive and encouraging for them to do any startups or entrepreneurship. Probably they will find or to choose to go abroad to realize their dreams. So given that as a fact, the purpose of my talk is that right now the fact is that we have to face the geopolitical conflicts, and we have to face some conjunctions, and we have to face some forbidden areas, and that would somehow limit the entrepreneurship of those founders. So the time is running, so my question is, are you going to continue invest or not? Yes, of course, that is for sure. We will continue investing in sci-tech, but the truth is, and my concern is that to all the practitioners, to all the investors and the youngsters, the challenge is very, very tremendous. But still, we have to explore the opportunities of the funding in USD because of the nature of it is different from RMB. But we hope that the ACO environment of RMB can be getting better, especially for the midterm and the long-term funds. The duration can be prolonged, and 7 or 8 years is not enough at all. And we hope that it can prolong to as long as that of the USD funding, because otherwise the startups would be very hard to be listed in the end on the stock exchange. Yes, this is really pertinent and down-to-earth suggestions about the duration of the funding or the fund in RMB. So next guest will be Liu Chang, Vice President of Cargill Greater China, who is also a lady. Thank you, Ms. Sun. Good afternoon, everyone. I'd like to thank CCG to invite me getting on the stage, and I'm with the Cordial Greater China. It is a U.S. company specialized in finance, logistics, food and beverages, and we had the history of decades and 16,000 employees. And last year, the volumes of the value that we created is equivalent to the rank of 135th among the top 500. And we have 50 plants in China, 10,000 employees. For a long time, we honor the commitment we made to Chinese market. With the continuous development in China's market, especially getting on the trend of the reform and opening up with the beneficiary and also the promoter and the participant of the reform and opening up. So we can see the series of the positive support and policies from the central government, from the local government, from Beijing government to support the market access relaxation for the foreign capital and foreign investment coming in, and predictability and transparency will be a must for the future to business environment improvement. So we think it is so good to look at and to see this promulgation of the positive policies. And we can see a lot of events like this being held. It is not only a very encouraging signal for the foreign investors, but also can inject the tremendous support and help to foreign companies like us. As a multinational company rooted in China for a long time, we see very positive about China's perspective in the market and a macro environment, although which is full of uncertainties. But I believe that China's government will further open up the market, and this confidence would never change. So our president, Mr. Ryan, paid the first visit to China and repeatedly mentioned the confidence or resolute confidence of him about China's market. From the current momentum of the investment, we believe that a stable environment of investment has to assure the predictable environment in the future. As long as it is transparent, fair, and in the just environment of international arena, can it be fairly allocating the resources both at home and abroad. So the government really need to refine some of the policies, some specific segments like the trade facilitation and market infrastructure and the procedures streamlining of the governance. Also, the legislation and laws and regulations are also promulgated one after another. We hope that these laws and regulations could be executed more transparently and down to earth, so that we would have a more communication reciprocally like today with each other. And anyway, we hope that the environment could be more predictable and transparent for the investment to come. And that is the basis for the investment to be expanded in the future. So the top level to business environment based on rule of law, we have one suggestion to echo Mr. Chen, that the market driving forces is very important as a precondition. So in terms of the structuring of the industry, we suggest that some administrative and bureaucratic procedures would be removed, like in the sector that we are in, like the extraction of the soybean, which has been included into the short list of the constraints or limitations of the support, and especially constraining the investment and willing to invest by some enterprises and companies. And our suggestion is that these policies could be removed, and everything could be done as per driving forces from the market, including the investment willingness. So the potential and the perspective in China is full of opportunities. It is our suggestion that China's government can somehow send some very positive signals to the investor from overseas on the relaxation of the policies and constraints, so that we would believe that these enterprises can grow together with the progress of Chinese market, and then we are willing to contribute further. Thank you very much. Within just 5 minutes, so good. And Ms. Liu Chang is on behalf of one of the top 500 companies to provide some suggestions on the regulations relaxation. Thank you very much. And I'd like to invite the next one, Mr. Liu Xiaoying, the founding partner of Eagles Fund, who is also a very experienced and renowned investor. We'd like to listen to what he's going to offer. Thank you. I'd like to thank CCG for the invitation to me here. I'd like to say something as a reference to you. CIFTIS, as a biggest platform for the trading services and the services industry and enterprises, we feel that it is also very important for a company doing AI, and we've been part of this platform many times already. And I'd like to select one angle to talk about the LLM, or large language model. It has been developed less than 10 years, 5 to 10 years or so. The new generation of the AI and LLM generation has become a common sense to people. But where to invest and how to invest and what specific sectors of the LLM should we invest? What kind of line of this sector shall we be invested in is a huge question mark. And the previous speaker has mentioned that as an investor, are we positive or pessimistic about the future perspective, or should we divert what we've been invested in this market to other sectors or other markets? And in the past 10 years, Eagle Fund have deployed our investment for a long time in Boston and Los Angeles and Silicon Valley and Hong Kong, China. We set up the joint venture fund denominated in RMB. So it is quite diverse, geographically speaking, and in terms of the portfolio of the products that we invested in. And cumulatively, we have invested in more than 300 entities already.
They are focused on new consumption, and sometimes we can add some B round or IPO. And now about 5 or 6 are going public, and in the future there will be more and more companies going public. In terms of future market value or its liquidity, probably there will be some challenges. So it is quite secure. For example, 怪兽充电 or 收钱吧, 超级新星 are all the companies that we have made investment in. In the future, so the primary market investors probably will be worried. In the past 2 weeks, we can see online some people are talking about VC crisis, or 90% of the VC will exit. Actually, when we make a preliminary investment, we are quite optimistic. You know, your angel fund, if you are not optimistic, then the companies will not get any investment. And I know half of my investment will just come to nothing, and only half will remain. And you know, 20% actually will just remain lukewarm, and only 10% of the companies probably will finally prevail and go public. High risk is always an important aspect of it. If you are not a professional investor, if you make a lot of investment in the high-risk projects, it will not be high returns. Your investment will come to nothing. But if you are a professional investor, you can use big data and to make careful considerations when you make investment. Actually, you can always capture some future potential unicorns. And I think each company that go public, or each unicorn that is successful will always have the angel period, as we call it, or entrepreneurial period. But if you do not dare to make investment, then it is even harder for them to get financing later. So I have my TikTok account. You can follow it. As an investor, I have been making careful considerations to guide the public to have a correct perspective on investment, and I have shared my personal experiences. And I also published a book. It is called Scientific Angel Investment. And next month, the book will be published and come out. And I hope I can have opportunities to give out the books to you. So just to come to the point, but your time is running out. Investors are always talkative. You can give me 3 hours and I will not be able to finish my talk. I'm here to learn from you. Of course, we can exchange views after this roundtable too. In the future, we will use several pillars. First, new energy, semiconductor, new material, import alternatives, and those will be the areas we will be focused on. So just recently, we have been focusing on new energy and digitalization. And also, in terms of AI, big model, we will catch up with international practices. So I think in the future, CIFTIS should also focus on AI application projects too. So I'm looking forward to more exchanges with all of you. Thank you, Mr. Liu. So the angel investors need to be optimistic. You need to be professional, and you are asking people to follow your account, Liu Xiaoying. So you can send each participant a book. Thank you very much. Susan Song, founding partner, Hongman Tongchang Fund Management, Executive Director, Xinjiang HM Fund Management. Thank you very much. I want to thank CCG for the invitation. I will cover 2 things. First, a little bit about my company. Second, I want to share with you my investment experience. I cannot actually talk about policy recommendations. I'm not in a good position. We are controlled by the Xinjiang Construction and Production Corps. We are a state-owned investment fund. We invest in 2 things. First, infrastructure, road, bridges, public utility. In Xinjiang, outside Xinjiang, and overseas. But the Xinjiang Production and Construction Corps was sanctioned by some other countries. So then we saw the plummeting of our businesses. And second, industrial investment. During the 14th 5-year plan period, big agriculture and new energy. We are looking for projects, but we have not made investment yet. And, we have some special food industry, for example, medicine-related food and health-related products. And this fund is new. Its scale is less than 1 billion. It was launched in 2019, and then we got the pandemic, and then we got the sanction from the United States. So actually, it is only this year that we started to make big strides in our operations. And in Chongqing, we got a business unit, and by the end of this year, we will establish a business unit in Hong Kong. This is something about our company and about our investment. I was engaged in VC. So early stage investment is only something new to me. So I think after this roundtable, I want to learn from the more experienced investors. Now we are making investment in 2 projects. First, injury management. Second, pancreas cancer project. Actually, in 2009, in medical equipment or apparatus, we started the investment, but it was just 1.0. We made investment in the testing materials. It was easy, but it was used a lot. But now we are reaching 2.0. We are working together with Yizhuang to establish an early stage fund to make investment in the operation-related medical apparatus in hospitals or surgery-related. Talking about recommendations for regulation. Just now, Mr. Chen made some important points. I think I share a lot with him. In the past 4 decades, we have made a huge progress in our opening up. But in today's society, we are custodian to the government-oriented fund. Actually, everything is following one version. It is terrible. It's not market-based, you know. So there is a mismatch. Mr. Chen just now said that we are at the early stage of socialism. Anyway, it is a public economy, and it is difficult for me to run our business under the public economy when we make investment. In the past, when we look at investment, we need to look at the product, and then we will look at the policies behind. However, when we make investment today, we always first and foremost look at the policy, and then we will look at the project specifically. So in the past few years, I have been trying to adapt to this environment. I have no option. In terms of investment guidance, I think the local governments are giving guidance to our investment. We are working together with local governments or the Ministry of Science and Technology. Actually, the government always have good intentions, but I don't know why when the policies come out, there are problems. Okay, my time is running out. Thank you very much. So you have very sincere recommendations. I know your fund has been challenged, but you are always looking for opportunities for better development. I believe you have a bright future. Wang Xiaohua, Jackie Wang. Oh, he's absent. And now Wen Xiong, founding partner of China Growth Capital. Thank you, Madam Sun. We are an early stage technology investor. We are good at cross productivity. For example, just recently, 2 companies got the approval from the securities regulator, and we made an investment in one company in 2017. The other company was in Suzhou, and it was also in 2017. They were first in Silicon Valley, and then we brought them to China. And last year, we made an investment in a company that launched the oxygen methane promoted driven rocket. So we need to look forward. So if there is a round of only 7 years, how do you look forward? So in the middle of your investment, there will always be ups and downs. So today we are at a different stage from 1957. At that time, the United States promoted NASA semiconductor, and they established a semiconductor lab in 1957. That was the US time, but today is the China time. So the ecosystem is not very complete. For example, the limits at the end of funds. So I think I want to focus on the second topic, that is the stock market. The capitalization of China is not strong anyway, at least from the perspective of science and technology. Why the forerunning companies spend a lot of money, but the capitalization is just 1/10 of the United States. Page tax got 150 billion US dollars. Its revenue is about 1.9 billion US dollars. It's raised about 30 to 50 billion US dollars. But for the counterpart industry in China, it can never reach that level. But that is a common challenge to all of the technology industry, because there is a lack of investment in technology, because the A-share market do not support the non-profitable companies in going public.
So worth money doesn't mean that you can definitely earn money from this worthy thing. And if you want to invest in a certain capital market, or if you want to invest into something, but you have to get out of this capital and value overnight, probably you have to look for a very wealthy investor and who can find a very good price for you. So what company to invest? We have to look for a young or very young startup to invest in, because it is still on the process or in the stage of development. In the preliminary development, it has a lot of potential and expectations ahead of it. And like Mr. Chen, Mr. Chen is this kind of people with this kind of talent decades before, as a very, very excellent entrepreneur and with a lot of potential and expectations ahead of him. So for us, we could imagine decades ago when we didn't have any cell phone, we didn't have any electronics products roaming on here, but still we have a lot of startups that are doing the business and offer the things that we mobilize and lead to the stage that we are in. So we can see there are a lot of good results that we could imagine. And for the capital market, or for the equity market, I suggest that the government has to implement the registration policy or measure, because we've been doing this job for 30 years, but still we finished the registration measure. We didn't implement the measure and regulation down to earth. So people are just looking for and pursuing the interest or the benefits only, but finally, if you are only doing the business related with those licensed entities, that is not enough at all for the capital market. Thank you very much. Yes, the time is controlled very well. And Mr. Xiong encouraging and advocating to liberalize the market, and measures and the spirit of the policy has to be implemented down to earth. Thank you very much for the suggestion. And next, I'd like to invite Ms. Xu Fang, Managing Partner of Galaxy Ventures. Good afternoon. I'm Xu Fang, Managing Partner of Galaxy Ventures. I'd like to thank CIFTIS for this platform. CIFTIS in China or globally is very influential. So I'm very honored to have this opportunity sharing my viewpoints on this platform. And Director Sun made it very clear that all of us are the investors. And first of all, I'd like to introduce the strategies of investment of Galaxy Ventures. And then I'd like to talk about the hotspots of investment and investment strategies. Galaxy Ventures was established in 1997. We have the whole team of the investment from Changgao Network. And They actually have submitted the application for IPO right now, and also I'm looking for the other partners to do the B2B businesses. And with that, Galaxy Ventures, since its inception, we are absolutely supportive of the investment in the supply chain and internet platform. And so all of the direction of the investment is to be. And it is our view that in the future, the manufacturing would be very important and critical, and the figures are the evidence. In the past 10 years, the materials values is 17 trillion, and right now it is 34 trillion yuan, and that is also 30% of the GDP of this country, which is also among the top in the world. And in 2023, high-end manufacturing has shown the fast growth, 7.4%. So from the figures that has been unleashed, we can see the promise or the potential of the perspective of the manufacturing in China is very promising. And we have to look at the upstream and the circulation and also the retail. And that has a lot to do with the relations of the production and the producers, as well as the different factors on the market. So in the future, we have invested into the vehicles, post-market services, and dealerships. And these vehicle companies, they have their proprietary brand, proprietary supply chain, as well as the post-market service entities. And then we invested into the industrial internet company as well. It was doing very well, servicing not only the domestic market, but also the international market, more than 30 customers. That's why we are very positive about the digital base towards green development and intelligent development of the manufacturing, and then turn back to the suggestions of the investment. And I believe that since the beginning of this year or every year, we would see the hotspot like the metaverse or the AI and ChatGPT and so on and so forth. So once out of several years, we will see the new hotspot of the investment. And my suggestion is that we can deepen our exploration into the certain narrow end place or segment, and you can look for the specific entry point, and then you can dig deeply into it and find out the insight that could never be shared with others. So that is the things that we want to do, focused in China, and then expand our business across the world. Thank you. Do you have any script to read? Because your time is controlled very well. Thank you. Thank you, Xu Fang. Galaxy Ventures is the manufacturing-based investment company, and you have very great confidence about the future market of the manufacturing in China. So investment is positive, and investors are positive, then the market will be very positive. Next, I'd like to invite Zhang Ligang, founder and chairman and CEO of Icon Healthcare Group, who is also alumni of Harvard University of Mine. Thank you very much for the invitation to me to attend this platform. And most of the guests are coming from the investment. And Icon is not an investor. We are a company specialized in healthcare service provision. And indeed, the venture capital right now is encountered a lot of problems, and from the capital, from the exit of the capital. So for us, I'd like to share with you some viewpoints regarding the current situation when and how can a healthcare company and what can be offered by a healthcare company. Well, years before, we had the values of more than 4 billion, and when the COVID is over, the volume is 6 billion, and this year it's expected to have a 7 billion yuan of the revenue. So I think this is a really good potential. And previously, some experts mentioned aging society. It is both a question and opportunity. And I'd like to take the Chen Dongshen, our chairman's quote as an example. Aging society is never a problem, but an opportunity, a promising opportunity in front of us. So talking about the healthcare revenue or expenditures on healthcare, China versus other countries, the most expensive one is coming from U.S. About 17 to 18% of the GDP paid for healthcare of U.S. And most of the advanced countries, all the way to Japan and France, and these countries spend 12 to 13% of their GDP on healthcare. And where is the position of China? China's figure is about 5.5%. And in the end, the expenditure of the healthcare share of the GDP is coming towards 8 to 9%, and that is just a matter of time. Sooner or later, it will reach that far. So Mr. Chen mentioned about the commercial health insurance that can play a big part of it. And the question is how to pay and what to pay and where to pay. So how much of them are paid for the treatment and how much of them are paid for the prevention of the diseases? So this is a really big question. And so we think that the expenditures will be tilting towards the prevention in the end. That is trendy. As for the country as a whole, previously we would have the clinical center and then all the way to the health as a center and prevention as a center in the future. And that's why in this track, Icon Healthcare have seen the opportunity going forward in this several years. Values could be created and exerted from this track. And we are one of the earliest provider of the physical check. And the biggest challenge of healthcare in China is whether or not you can identify the resources of healthcare, and which is in shortage in China or imbalance in terms of the allocation and distribution. So most of them are concentrated on the 500 grade 3 hospitals in the top tier cities, and they are time-honored. And the cities with well-known and time-honored medical universities and institutes is very limited. And the figure is that how many doctors per 1,000 population? That would be like 4.4 is the best. That is the figure from Switzerland, and 2.7 is the figure from United States. And as for China, that is 1 out of 2.5 per 3.5 million. Well, the problem is that the doctors and the physicians of the United States, they would hold the PhD degree, but among China's doctors and physicians, the share of the physicians with the doctor and PhD degrees is only 30-something%. And many of them are with the academic degree of undergraduate even, and there are lack of experiences and a lack of the high education in the specialized medical research institute. So we also have to look at the figure of the survival rate of cancer after operation after 5 years. And 73% of the Japanese patients will survive that 5 years, and the figure is only half in China. And there are two determinants. One is the new drug and also the processes of making the new drug. And the second is that if the cancer can be detected early, then the survival rate will be higher. And the survival rate is very high in European countries. That is due to this kind of guarantee, early detection and early treatment. That would be the determination for the great survival rate. So prevention is the best silver bullet with the AI application and cloud computing and big data. The private hospital can make use of these resources to even surpass or outperform those normal physicians or the normal hospitals. That is for the detection and the diagnosis. Like the AI and the robot, they can read the diagnosis or read those figure and this data and prescribe. Thank you, Mr. John. You've been talking about an industry, healthcare industry, and share with us a huge number of the figure to show the potential of the AI technology application into healthcare industry. The potential is very promising, and investors, please watch this industry. And the next one is Mr. Zhang Lianqi, member of the CPPCC National Committee, president of China Enterprise Financial Management Association, and also the non-resident senior fellow of CCG. Thank you very much. Yes, about China's economy and what is the pulse of China's economy and the trend of China's economy is very critical in here, especially at this forum. There are several suggestions from mine. In the past 3 years, some macroeconomic administration departments feel threefolded pressures from external environment, from domestic. Their outlook was somehow slow or very very slow, and also even have a very pessimistic outlook. But going forward, when July 21st, when the Chinese Central Economic Work Conference was held, some signals are being shared already, because in the future, some policies probably after issuance, the document or the circular of the document will not be implemented overnight. But that is the positive signal. And when the signal translated into something real will take some time. And this is the resolute trend. Long-term positive as a trend will never be changed. In this short period of time, we will see some trend from stability all the way turning up to the positive rise. And we have some evidence featuring the figures like the new 3, that is the lithium battery and the tricycles. The export number is increased very, very fast. So the trend is very positive in a turnaround manner. And investment in the manufacturing also see a positive trend for 2 consecutive months. And also the domestic demand contribution to the drastic improve of the investment and the market is also very high, and the consumption share of the GDP growth rate is 4.4%, although it is a little bit cold and a little bit sluggish, but the KPI, especially the KPI regarded with the CIFTIS, is positive.
Just recently, we issued a lot of policies to make them more targeted. For example, the measures to expand consumption, measures to promote the private sector, and measures to improve foreign investment. So the capital market and the real estate market are also seeing some new policies and measures. Probably you have seen them. And also about taxation, individual income tax adjustment, and the policy toolbox, and the policies for supporting the private economy, 31 articles, and to promote the better understanding of the private economy, etc. All those measures have been quite good news. Yes, we will have a long way to go. However, in the second half of the year, I think the domestic demand will improve and the real estate market will pick up. You know, we cannot depend on 1 or 2 measures. We need a targeted and systemic package of policies. When the Chinese economy is getting better, investment will get better, private sector investment and manufacturing investment will also get better. So the most difficult time has passed. So 5% growth target will be within reach, and we need to have confidence in it. But we also need to watch out for the voices that are misleading. We need to eradicate those prejudices, and we need to take a long-term perspective when we see the Chinese economy, because the internal driving forces and the private economy are getting better. If you want me to make some recommendations, we need to better connect digitalization and automation with the manufacturing. We do not have so many businesses like Huawei, but Huawei has issued a Pro 6 mobile phone. It's not just a one product. Actually, it's called the steam engine in the past 6 months. It is an example of the manufacturing industry to tackle containment. So the private economy can work harder to guard against the risks. Actually, the manufacturing sector is another important bowl after the food industry. And also, I want to say that the regulators need to make use of the policy space, and they should not work against each other. They should build synergies, and they need to be very careful. They need to foster confidence in the private sector, and they need to work harder on the advanced side and systemic side of the manufacturing industry. They need to work hard to ensure the reasonable quality growth. Thank you very much. Mr. Zhang, as a policy researcher, you have expressed your full confidence in the current economy. And for the investors, you have also raised high expectations. Jackie Wang is now with us. So please, 5 minutes. Thank you, Madam Chair. I want to thank CCG for the invitation. I'm a founder and president of United Capital. In the past 30 years, I've been working for many Global 500, for example, Ford. And I also worked with Alibaba. So I have been working from the traditional industry to the new internet industry. So the United Capital is not just another fund. We have strategy and capital and resources. We provide integrated services. In the past decade, we found that the market is not just about capital. It is about the industry. I think industry and capital need to combine to provide better services to the companies for their innovative development. So strategy, capital, and resources. We have reached tens of thousands of companies, and we served a lot of them, and many of them went public. And we also made some direct investment in a lot of funds. So we have also coached a lot of private companies in getting bigger. We have also helped some MNCs to establish their presence in China. So I want to share with you some of my experiences in combining industry and capital. We are focused on high-end manufacturing, internet, new economy, digital economy, consumption, healthcare, and environmental protection. So industry and company. So when we look at the core competitiveness, we should not just focus on the company, but also the sector and even larger, the industry. So we need to look at the past 10 years, and we need to look at whether it has the potential to become a leading company in the industry. So talking about capital, I think the secondary market of capital has faced a lot of challenges. And with a big environment, the performance of a lot of companies are challenged, and there is a lack of confidence. So the secondary market is not good. The U.S. share market and the Hong Kong share market and China Hong Kong market, they do not truly reflect the value of the companies. But such a secondary market can also be reflected in the primary market. We have been coaching the companies the past pandemic has affected the economy very much. China's private companies have been hugely affected. People say that probably in the consumption there will be some rebound in the first half of the year, but actually this year the economy has not matched the expectation. So the private companies are still facing a lot of challenges in their development. There are two things. First, it is difficult for them to get financing. We have been coaching them every day, helping them to raise fund. A lot of investors, for example, LP, is lacking in money, and the performance of the private companies is bad. So it is difficult for them to raise money. So a lot of good companies are facing the financial strain. But for the investors, on the other hand, it is a good opportunity for them to start the investment in some companies or get their equity. Another important difficulty in the primary market, a lot of companies are facing market difficulties or operation difficulties domestically and internationally because of the environment. They are facing export pressures and there is a lack of domestic demand. So domestic market is also facing challenges. So whether investors or companies, we both face a lot of pressures. And at the industry end, we are positioned as industry plus capital. I do not think that there is a lack of money in the market. The money is liquid. When we make investment, we need to pay more attention to the industry and to the companies. Even in this difficult situation, we still can find good companies and empower them. At the industry end, we are entering a stage of industrial adjustment after 3 decades of development, 30 years of trade dividends to 20 years of real estate dividends and to the past 10 years of internet dividends. So all of them have ended. Now we need to face the new challenge of making new adjustment to our structure and our business. But I think still we have opportunities. For example, real estate, trade, and platform economy driven industries will be shifted to new emerging industries, for example, the digital economy and new energy. And second, industry-wise, each industry has a lot of good sectors, high-quality sectors. But in my experience over the past 2 decades, I believe that each sector has their own hotspots. For example, O2O, prepared meals, or community group buying, etc. Those are hotspots. But for companies, they need to make their own judgments and do what they are good at, so that some people can buy their products and services, and then they will grow stronger. So I think the two most important directions are livelihood and science and technology. I think whether it is this difficult time or the future development, we should always focus on science and technology and livelihood. Science and technology are the productive forces, and livelihood are the basic priority. So that involves consumption, old age support, and health care. We have a huge population, and we have difficulties, but still we will have a great domestic demand that will give us full confidence in going global because we have this strong big market. Finally, company-wise, when we look at the innovation and development, yes, I know a lot of companies are making investment, you are making innovations, but we believe under the new circumstances, what kind of companies are good companies? They need to satisfy the following 6 requirements. First, if they're supported by the government, they are good for society, they can have sustainability, and they have commercial closed loopholes and innovation and entrepreneurship. So I believe no matter what difficulties they have with the support of the central government, they will create value for society. They can make innovations in their business models. They can achieve their closed commercial loop, and through hard work and innovation, they will create new glories in their business going forward. Thank you.
So you have 30 years of investment experience. I think just now you have really concluded our roundtable today very well. The industry-wise and industry plus capital. So 30 years of trade dividends, 20 years of real estate dividends, and 10 years of internet dividends. So what will be the next 10 years? I think you have pointed out a very good, bright future. So industry, company-wise, you have given us very good recommendations. We have the last minute. Now, thank you for your good conclusion and summary. I also want to thank all the panelists for their objective and confident statements. I know each panelist can speak for 3 hours, but each of them is only given 5 minutes. I hope that we can edit their remarks and then publicize them so that you can read their important points. So please now come to the stage for a group photo.
Thank you.